Excellent. All right, welcome everybody. So let's dive right in. Lots of information to go over, and never enough time to go over it. So today's topic, we're definitely going to get back to the live charts in just a little bit. But I thought we'd split this session up with, learning something very important, and then applying it, going into the live markets and applying it. So the topic for today is, let's see, someone doesn't have a chart. Let me grab the chart again for you. So the topic for today is news, trading and news, Forex trading and the news. It's a very hot topic. It's something that I think new traders completely get wrong, and it's really where newer novice traders get it wrong and lose money. Seasoned professional traders that know what they're doing, it's their favorite time to trade. All right. So, kind of with taking a little poll here, how many people stay away from the markets, or at least stay out of trades, pull your orders when there's big news event coming out? Big news. Anybody who does that? Yeah, it can move. It can get fast. All right. Thanks for your feedback. It's good that everybody kind of can share and see what other people are doing and thinking. Now, here's the other question. How many people love to trade the news? How many people love trading the news, putting your orders in at those levels when the news comes out, which is just the opposite? Yeah, everybody tells you to stay away from the markets. Yeah, but I hear you there, Lenny. Yeah, some people don't care about the news. Some people do. Well, here's the thing. Okay. I can tell you. So my conclusion is, from many years of experience, if you want my opinion, okay. Yeah, hold tight. I saw that. If you read that, he says he saw the euro hit supply and payrolls the other week for an awesome trade. Yeah, that was a few weeks back. Absolutely. So anyway, from my opinion, from years of experience in trading and tons of trades and everything, is that if you know what you're doing and you know how to properly identify supply and demand levels, which are the turning points, okay, then I think you absolutely want to be there for the news. I can tell you some of my best trades have come, and probably most of my best trades have come on very, good or bad news events. Not just average news events, but really strong news events. And I'm going to explain to you and show you exactly how that works, and then we'll go in and look at the economic calendar, find some news events coming up this week, and set up some trades, based on that news. So that'll be what we're going to do today. So, how does it all work? Okay. Yeah, definitely. I think when, the last U.S. jobs number, okay, last U.S. jobs number, we'll look at that one. That was a great day to trade. Okay. Brad, I think the key is, the real answer is the proper levels, right? That's the key. It's not like, I wouldn't say like some levels work, some levels don't, based on news or seasons or this or that. It's identifying the proper supply and demand levels. We'll get into that in a few minutes, but here's a statement that I think might confuse some people, but we really have to understand it. Okay? And it's this. For example, if you want to see a very, very strong rally, if you want a market to rally in strong fashion, all you have to do is get everybody to sell. Okay? Now, the new trader, the average person, is going to hear that and say, well, he must have misspoke. That doesn't make any sense. If you want to see a market rally, get everybody to sell, right? You would think if everybody sells, the market's going to go down, right? Well, in the short term it might, but let me show you a number of real trading examples before we get into the live markets, okay? So I want to share some things with you from the past, couple months or so, and we're going to focus on big news events, okay? Let me do this one first. The only thing that makes doing this session uncomfortable here today is that unfortunately we have to dive into some really bad news, which nobody wants, and we'll start with Japan, okay? All right, awful news that of course nobody ever wants to happen, and I'm sure anybody that made money trading during that period would gladly give it back many times over for that news not to happen. But it's unfortunately the way the markets work. It's really bad news that brings prices down to deep discount demand levels where we want to be buyers. So these days, when big news events happen, Online Trading Academy, I'm the VP of Education, Online Trading Academy. We're now the biggest trading school in the world. So when big news events happen, big groups like the Wall Street Journal and others tend to call us pretty quickly just to see what we think. And that happened on the 15th of March. That was right in the heart of the earthquake and nuclear reactors blowing up and everything. So they called me and really followed this through because I think it'll really help you understand and be comfortable trading the news. So they called and wanted to ask me what I thought about the markets given what was happening in Japan. And if you see the title of the article, Steer Clear of Radioactive Japan, does that sound like a bullish or bearish title? What is the Wall Street Journal and Barron suggesting there? That the markets are likely to go up or go down? Yeah, probably pretty bearish, right? So there's a big invitation. Now, I agree with that, and it was really, really bad news. In fact, you can't get worse than that, right? However, when I looked at the chart on that day of the S&P, okay, here's the chart of the S&P daily chart. That was the day of the interview. Prices were collapsing. And I look at the chart, and yes, even though the news was bad and the markets were down, as I said on the bottom there, markets collapse into high-quality demand levels that turn out to be incredible buying opportunities, right? Okay? So what happens is, they were kind of steering towards a bearish answer, but I just couldn't do that because the charts were saying the opposite. So, price falls down into demand. I think most people kind of know what happened after that. Again, I'll explain the details of this in just a second so you really, really get it, okay? So, about a week or so later, we're back up near the highs, okay? Is that some crystal ball or some magic strategy or something? No. It's simply applying the basic principles of supply and demand, okay, at a time when the rest of the world is focused on catastrophic news. Does that make sense? Okay. Now here's how it happens. Now this is the part you really need to understand before we get to the Forex charts. Okay. So let's go back to that statement. If you want to see a market rally really strong, you have to get everybody to sell. Okay. Because think about it. Okay. Bad news comes out. It's really bad, right? Japan, 9/11. When they bombed the subways in London, some horrible economic news, a bad jobs number, really, really bad, what happens? And go ahead and be interactive here. No, demand zones are not pivot points, Spain, FX, definitely not. Okay, what happens when the news comes out, when it's really, really bad? Does everybody buy or sell? They sell, right? Everybody sells. Okay? And the worse the news is, the stronger the invitation to sell, so everybody sells. Okay? What is that going to force price to do? Now remember, it's not like someone's deciding where price is going to go. It's a pure numbers game, right? Okay. So is that going to, the worse the news, now really think this through, this is important. The worse the news, is that going to force prices down to, you have all these sell orders coming into the market. That's going to force price down to a price level where you have enough willing buy orders to fill those sell orders, right? Does everybody understand that 100%? Not like someone's making any decisions. Now price has to drop to fill those orders. So you have to find a price level where you have lots of willing buyers, right? Where is that always going to be? Someone answer that. Where are you going to find the most willing buyers to fill those sell orders? Yeah, at demand, but at any old demand level or at a very, very strong demand level? Right, a very, very strong demand level. And the definition of a strong demand level is that there's lots of willing demand in there, right? No round numbers, forget oversold, forget any conventional talk right now. And I'm not yelling at you, I'm trying to help you, okay? That stuff doesn't mean anything. It's not going to put any money in your pocket, right? Right, so it's going to force price. So the worse the news is, all these sell orders that come in, that's going to force price down to a price level where there's tons of willing demand. You need to have lots of buy orders. Otherwise, price is not going to stop falling. Okay? Next question. Now the last seller sells. Okay? What's going to happen next? Now that last sell order is filled. Right? What's going to happen next? Price is going to take off like a rocket. Bam. Okay? I remember I started my career on the floor of a trading floor at an exchange, the Chicago Mercantile Exchange. Now the biggest biggest exchange in the world. And I started in the currencies. Right? You're going to get the strongest rally you've ever seen. Okay? Remember British Petroleum? Right? We had a buy in the XLT at 27, got to 30, got hung up at 30. All of a sudden, this news of bankruptcy comes out and slams it down. All these sell orders come in and brings it down to that price level where there was tons of willing demand. Things gone up ever since. Okay? Yeah, and Pip Runner's got a good point there. Okay? One of the reasons, the main reason why it goes up, because you don't have any sellers left. It's not that you have a ton of buyers buying it all the way up. You probably don't. But it turns at that level because that's where all the demand is and you don't have any more sell orders, right? So your price is going to shoot off that like a rocket. And now there's nothing to stop it from rallying because everybody's sold. The problem is most have sold near the low. And that's why the novices get hurt so bad with the news. And the people that know what they're doing make so much money with the news. Does that make sense? Okay. Exactly, focus, but you have to find the demand level. Make sure it's down into the demand. Okay. How you doing, Manish? All right. So let's move on here. I think you get the point. And of course, it's just the opposite for a market going up and coming down. All right. Lenny, we're gonna get into the charts in about 5-10 minutes. Okay. The live charts. We'll map some of these out. We'll look at some news events coming up this week, and then we'll look for some trades. But let me run you through the trading week from Japan. Okay. That Japan week. So let me run you through some of that. So, that was a crazy, horrible week, in Japan. So there's the 15th. That was that day. Took a few trades. The currencies were moving quite a bit. Of course, the yen was moving more than anything else. And you could see from this is all real trading, by the way. This is one of my accounts. It's not hypothetical returns or anything. So you can see most of the profits were made in the yen on the 15th. Okay. If I take you out to the chart on the 15th, okay, so there's the chart on the 15th that produced some of those profits, okay. All right, so took a short position in the yen there. Again, just taking advantage of wild swings in the market. And again, unfortunately, it's crazy news that causes this to happen. And that's how it always is. Next day on the 16th, okay. All right. Yeah, Archie, remember, prices rally from demand levels and fall from supply levels. Okay. And we'll get into the live charts and plan some of these out in a few minutes. Boyke, no, I wouldn't say so. What it is, it's the impact. So is it it's the invitation, the impact. So here's the next day, the 16th. Again, taking just prices moving very quickly. I'll run through these kind of quick, just so you can see how a week works with the news. Okay. So there's the 17th, and then just real quickly, okay, there on the 17th, we're actually buying the yen to make that $3,900. Okay. Focusing on, those are huge moves, big moves, markets moving fast. If you know your levels, you can do very well. If you don't know your levels, you're probably going to pay someone who does. Yeah, and if you're new to this, to FX Street, definitely go back and watch the videos. We have like years worth of videos now, where we give detailed explanation on how to find these levels, and there's a lot of information out there. Okay? Thanks for that note there, Joiny. Okay. All right. So real quickly, I'll run through a couple more of these. A couple more. There's the 18th. Again, as you can see, the majority of profits were made in the Japanese yen. Okay, and I think you get the point. Okay, when there's strong news, someone who knows what they're doing in the markets is going to trade that market. Okay, you should be able to see the charts now. We're back on the charts. But I just wanted to show you kind of real live trading. You know, it wasn't great trading, wasn't bad trading. It was, you know, it was profitable trading on a week when, you know, news dominated the markets. That big invitation dominated the markets. Think about when they bombed the subways in London. You remember that? Anybody watching the market back then? It absolutely applies. Here's what it is. So Pit Runner's asking, does it apply to a Bernanke speech? Here's what is, Manish, I have a session coming up very soon. It's on the schedule already in August. So Pit Runner brings up a good point. Is it a Bernanke speech? Is it this? Is it that? Here's what it is. It doesn't matter if it's an economic report or a news event or could be anything. It's how strong is the invitation, right? Is it a strong, it's got to be a strong invitation. It's got to be something that a lot of people, hear and listen to. When there's a really bad news event or bad economic report or bad speech, that's an invitation that goes out to the world of market speculators and says, sell. Okay? That's an invitation to the novice that says sell. To the astute market player, that's an invitation to go look for a demand and supply level. Does that make sense? All right. Okay, but again, I think, if you know what you're doing, you want to be there. All right. Let me show you one more thing, and then we'll dive into the live markets. Hopefully, this is helpful. It bothers me that so many people are told to just completely stay out of the market when there's news. And I'm not saying you should just jump into the market when there's news, but, once you know what you're doing, you absolutely want to be there. All right, so take a look. Let me show you one more here. This is the last one, I promise, and then we'll go to the live charts. Trying trader, you might want to go down to a smaller time frame. There's got to be something there if there's a strong move in price. It's not just going to turn for no reason. So maybe you need to look at just go down a time frame or two. You'll probably find something there. Okay. Yeah, Haley, I'm going to hit that next in just a minute. So take a look at this real quick. Just want to show you this one. I'm sure some of you in here actually traded this one. You're looking at a chart of Friday, June 3rd. Remember, that was the Friday morning where there was a really bad employment number in the U.S. And took two trades there, okay, very focused on the level. So the chart on the left shows the morning where the news came out and the S&P collapsed, okay? But look where it collapsed into. If you look over to the left, it collapsed right into a very quality demand level. Based on the lessons we do here at FX Street and at Online Trading Academy, that's a very quality demand level. It meets all the odds enhancers we talk about, right? So the bad news invites a lot of sellers into the market. They do is they take that invitation and sell, and price is going to fall until it reaches a level where demand exceeds supply. What happened from there? If you look, what happened from there, if you look at the chart on the right after this big collapse, price then rallies. So we take profits on the long there up to a supply level where we sell short. Okay. So another way to say all this morning, I just bought at wholesale prices. Another word for demand is wholesale. Another word for supply is retail. I just bought at wholesale prices from people who are trained to sell at wholesale prices. Then I sold at retail prices or supply levels to people who are trained to buy at retail prices. Remember, everybody out there is taught to do this wrong, okay? Let's see, Vol, the wick chart, you're talking this big red candle? Is that the one you're talking about? Remember, this red candle here is this drop that I've scrunched up over here. So, all right? And, again, the big collapse comes because of the bad news. Okay. Wicks at the top. Up here? The wick in the base. Yeah, as long as you put your stop above that, you're probably going to be okay. Yeah, it's not great. But remember, too, the main thing there, I agree with you, that's not normally good, but remember, this green candle with the wick, was right at the number. That was like, seconds before the number came out. price just spiked up and then came down. So, the whole world was waiting for that big number to came out. Okay. Great question there, Harley. I'm not sitting there, pushing buttons on these news trades. Believe me, most of the time the orders are in the market already. Okay. There's no reason to watch. I put the orders in the market. I'm very okay with the potential loss. I'm very okay with the potential gain. Why sit there and struggle and try to push buttons and let all the emotions, play into it? You know what I mean? Okay. Yeah, joining. We saw the Canadian, no, not that one. I didn't see that one. Okay. All right. So, let's go into the live markets here. But there is one little thing we have to discuss before we look for some trades. Okay. One of the toughest places to do this, one of the toughest markets to do this in is the Forex market. And why is that? Well, I should say the spot Forex market, it can be tough for people because, when you have a typical, not every, but most, a typical spot Forex platform is going to, when you open it up, the first time you download it and open up the platform with your account, you get a news feed right there, right? Okay. Right? You get a news feed and the news is like right in the middle of that platform, right? But who's writing the news typically? Where is that news coming from? You have to be really careful. Yeah. Often it's coming from the broker, right? Okay. Now, when you're trading in a spot Forex program, typically who's on the other side of your trade when you're pushing the buttons? Exactly. The broker. Most are just market makers. Okay. So have you ever noticed that when prices are nearing a supply level, does the news get good or bad? Gets pretty good, right? Or when the news is nearing a demand level where you want to be a buyer, the news somehow gets bad, right? The invitations are out there to sell. Okay. Do you ever notice what happens to the spread when in a spot Forex platform when you hit a key supply or demand level? You ever notice what happens to the spread? Yeah, it gets huge. Why? Because exactly, it's always going to get wide because if you go to buy at a demand level, you're forcing the broker to sell. And they don't want to do that, right? Okay, so they're going to say, okay, you can buy at this demand level, but we have to price in our profit first. Just like if you go to sell at a supply level, the spread's going to get wide. They're going to say, yeah, you could sell here, but because you're forcing us to buy where we don't want to buy, we want to sell, we're going to have to, widen the spread to lock a profit in for ourselves before you. Does that make sense? All right. Exactly. So be careful with that. A lot of people turn to the Forex futures. As you know, anyone that's been to my sessions here, most of the Forex trades I show you are in the Forex futures. Okay. So just be careful with that. All right. Let's actually, instead of going to the live markets first, let's do this. All right. Anybody recognize this economic calendar? All right. Well, yeah, one of the best out there. FX Street. Let's take a look. So today is the 19th. All right. Let's move on to the 20th. And you could totally help me out here. And just pick out any of these economic reports you think are going to be pretty big. I'll look too here. Let's take a look. Anything really big coming out, and if not, we can go to the next day. Okay. Yeah, I've never pulled this up in the webinar, but let's take a look. Let's find something that we consider are going to be pretty big. Someone's saying, Rob's saying the UK minutes might be pretty big. Bank of England minutes. Okay. All right, so let's go to, let's see, Bank of England minutes. All right. So let's do this. Let's go to the British pound. It's coming out tomorrow, and let's see what we can find here, okay? All right, so we're looking at the British pound here. Remember that those minutes are coming out tomorrow, so that may cause the pound to really move. I guess a good report is going to cause the pound to rally. Bad report is going to cause the pound to go down. But one thing we can be pretty confident with is that when those minutes come out, market's probably going to move, right? So if we take a look at the larger time frame, both weekly and daily, we've got a downtrend going, making lower highs, lower lows, right? So when we come to the smaller time frames, it's probably not a bad idea to look for a shorting opportunity. If we go to, let's pull a chart up here. Let's go to this big time frame here. And I'm trying to get to as many questions as I can. Apologize if I don't get to enough, but let's make sure we plan some trades out here. So here's a larger intraday time frame of the British pound. Now, if we look, remember the way that we find supply levels, and again, I know there's some new people in here. Make sure you go back and watch the videos because I'm just kind of do it here. Remember, some of the things, the way we find supply levels, which is where prices stop rallying and turn lower, is we start out with current price and we scroll left without cutting through candles. We never want to cut through candles until we get to this area right here. Okay? But that's not good enough. We want to go down a time frame. Let me show it to you here. Down a time frame and investigate this level. Okay? We want to draw our lines in. We want to plan out the entire trade. What about the demand level below current price? Well, again, if we start with current price and scroll down and left, okay, we want to find the picture that represents more willing demand than supply. Okay? So I'm going to draw that level in right here. And let me just draw it in and then I'll share it with you. There we go. 1FX, no, we don't do it that way. There's a very specific rule-based way that we do it. Now, so remember, what I try to go over here at FX Street is as much of this information as possible. Obviously, we have some, at Online Trading Academy, we have our Forex trading room. It's called the Extended Learning Track for Forex. That's where we have, we obviously have a lot more time to go over all that stuff. We have, 2-hour sessions, 3 days a week. I usually never even talk about it here, but I see so many questions that I thought, I'll just bring it up. So we try to go as much as we can here, but again, I strongly encourage you to look at some of the videos. They're free, and spend some time there. Okay. Simon, yeah, we always want to go down like one time frame to do a little more investigating. Okay. So here's our demand level below current price. Let me just draw that in. Let me write in there so you're very clear. Okay. And then supply up here. All right, I'll grab the chart again. There you go. Okay, so we've got our demand or wholesale level below, supply or retail level above. Okay. All right. Yeah, Manish, there's some definitely on the OTA website as well under resources, and then recordings or videos, I think it is. You'll find some there as well, and there's plenty on FX Street. So, with the potentially strong news event coming out tomorrow, and there's always a lot of stuff coming. Every week there's something big coming out of the UK. We've got some pretty quality levels in here. Now, to map out that supply level above, yeah, the 162 is not a supply level for us, Andrea. That would not, based on the odds enhancers, that would not meet our criteria. Okay? Yeah, for us, that's not a supply level. But I'm going to go down a time frame and investigate this supply level a little bit higher. Okay, so let's do that. So now I'm going down a time frame here, and if we look at that same supply level over here, now we can very strategically put our level around that. We actually have two levels on top of each other, so I'm just going to combine them and make it one level. Okay, and there we go. All right, so I'm just going to combine them and make them one level, and we'll put this back. And let me just grab both. Now you can see both. Okay, so if you look at the chart in the upper right corner, and you look at the chart in the lower left corner, okay, we now have a decent supply level above, a decent demand level below, and we're ready for a big news event. You could certainly, Ali, scale into a position to trade, absolutely. Harley, not too much. Remember, everything we do at Online Trading Academy is very rule-based. Okay, very rule-based. And we pre-plan everything we do. And what I showed you here is exactly the same. This is no different than what I did for that, that week in Japan or that jobs report for the S&P a few weeks ago. Okay, it's the same thing. Even today, I think there was some news out today, I think, as well, right, or this morning in the U.S. So we had a bunch of little trades that went off. The supply level, Al, we would call that a new fresh supply level, according to the odds enhancers. All right. Yeah, Spain. No, we're not looking at pivot points for supply and demand levels. And remember, for those that are new, the definition of supply and demand that we're using is very different than conventional support and resistance. We don't subscribe to the school of conventional technical analysis, right? We stay far away from that. Okay? Remember, most of your competition is taught to do this completely wrong. Okay? So, think about it. Most people are taught to buy when the news is good and buy when the trend is up and buy when, the economic reports are good and, all that stuff. When all those things are good, where do you think the price of the market is? It's never going to be low, right? So just be careful of that. All right, let's go to another market here. But I think we're pretty well prepared for the British pound. Now, these levels that I put out here, they're obviously bigger time frame levels. Okay, they can you can certainly use these for day trading levels too. You don't have to. You don't necessarily have to just put your stop on the other side. You can go to smaller time frames and use these for day trading levels as well. Yeah, let's take a look at the euro. Absolutely. I didn't start with it today just because, everybody seems to just always look at the euro. We do too, so I thought we'd just change it up. But I think the pound was good. We got a good number coming out tomorrow, some good information, I should say. So we're set up for it. All right. All right. Arching is asking a great question. If today's home sales in the U.S. was greater than expected, why didn't it go south? Well, I can take you to a really good short trade we had today in the FESX, okay? Because that's exactly what happened. In fact, let me do that here. I think you'll really like it. Give me just a second here, and I'll bring it up for you. Okay? Today was a great example of how that happened. Take a look. All right. Can everybody see the screen okay? These are pro picks. We have them for Forex, futures, and stocks. This was a play from today. So it's a great example of the news. We found a supply level in the FESX, which is the euro equivalent to the S&P, a supply zone up here, rally base, and then a gap away from that level. Okay. So, but yesterday prices closed down here. Makes sense, right? So what's the easy way to get price to rally up to that supply level? We want it to sell short here. Remember, in Pro Picks, again, we have these for Forex. We give you the exact entry, the stops, the targets. Okay? So, what needs to happen for price to get up to this level? Good news or bad news? Good news, right? Absolutely. So I guess we had that today, right? We had some good news on housing. Is that true? I don't even know. I didn't even see the number. Was it good? Okay. Well, so the good news comes out, price rallies right up to this level, and then falls and hits targets 1 and target 2. Okay, we made about $1,200 on the trade. All right. Well, if CNBC said it was good news, then it must be good news, right? I'm just kidding. But anyway, that's how it works. So that's what happened today. Good news caused price to spike, and then it fell and hit targets 1 and 2. Okay. I actually don't really have anything else to say about this. This is just exactly what we do and how we do it, right? Okay. Does that make sense? Okay, this is from today. Okay, let's go back to Euro. All right, sounds good. So let's see. Yeah, Ebby, institutions and banks, the big ones, they pretty much know where the orders are. I mean, that's what the whole reason for, let me just back up a little bit. The whole reason for this whole supply and demand talk all the time is because it's how we time the market's turning points in advance. A lot of people say you cannot time the market's turning points. We say you can, with a very high degree of accuracy. So how do you do that? Well, you have to figure out price levels where supply exceeds demand or demand exceeds supply. That's where the turns in the markets always happen. So what we do is we find a picture that represents that, okay? A bank or institution, remember I come from the institutional side of this, you know where your orders are, and you know where your institution's order are and where some of the other big groups are. So, our goal here is to just, my goal is to keep pushing you and training you to identify what that looks like on a chart. But, prices are going to be pushed into those levels by an institution or a bank because they want to get their orders filled, right, before the real move happens. Okay? Maurice, no, there's levels all over the place. I don't think you're going to ever have a lack for levels. Okay. All right, let's go back to Euro here and let's see if we can find another trade. Okay. Now we do have something here in Euro that looks a little 5-minute level. Let's just check the other time frames. Make sure it's okay. I'm not in love with this, but if you're looking for a short-term day trade, not in love with this because of the wick, but I wouldn't be surprised if this worked out pretty well. I'm just gonna put some lines up in there. I'm not gonna take this trade, but the last few sessions we've put little trades like this in here, and they've worked out pretty well most of the time during the session. So I'll just throw that out there just in case. And bigger plays in the euro, I would say there's not a whole lot to do right now, simply because, remember, if I expand this chart, here's the larger time frame chart of the euro that we've been, going over for literally a couple years, 2-3 years, right? And right now we're in the middle of our larger time frame demand and supply levels. So as far as bigger picture opportunity or swing trading opportunity, there's really not a whole lot to do there. Okay? Let's see. You could just, Harley, you could do that. You could find a 5-minute level and just trade that. But I would always take a peek at the larger time frame, because the reason why I did that here is, okay, so that looks like an okay supply level, not great. That wick on the upside kind of hurts it. But how do I know that's not sitting right on top of daily demand? You don't unless you look at the larger time frame, right? So I think you always do better if you do that. Let's take a look at the Aussie. All right, here it is. Oh, excellent, Janita. If you get a chance, email me the trade. I forget which one it is, but if you get a chance, email it. I always forget those. And by the way, there you go. I just put my email address in here, @SeidenTradingAcademy.com. All right, thanks. So here's the Aussie. Let's take a quick look. We've been watching in the Aussie. If you look at this 180-minute chart or the 240, again, the chart in the upper right or lower left, we're rallying right into this 107.40 supply. The only problem is we've been here a number of times. As a short-term trade, it's probably fine. There's probably not a whole lot of demand until 67-ish, but no, I think it looks okay, but we've just been there a number of times. Here's kind of a little nugget that I think will help you. If you find a supply or demand level and you look direct just to the left of it and you see a lot of trading activity in that area, going back, it's probably not a great level. Okay? Yeah, Ali, any pair is probably fine, but I think if you stick to close to the majors at least, you'll be okay. Okay. All right. Manish, not too low. Don't go too low. If you try to, let's say you find a supply or demand level on a daily or weekly chart. On a daily chart, don't go all the way down to like a 5-minute chart to refine that entry, because you're going to make it so tight by the time price gets to your new refined entry price, there may not be any supply or demand left. You know what I mean? Okay. All right. Very good. Very good. So let's move on to another market here. Does anybody have another market they want to look at? There's really not a whole lot to point out in the Aussie. I think the pound had those two opportunities that we're just sitting there with. Okay. Some people are looking at dollar Swiss. Let me pull that up. Give me just a minute. Oops. Okay, here's the dollar Swiss. Again, this thing has really been on the move. You know what? Let's do this one through the futures. How about that? Because I know I have a trade set up here in the futures. Let's see. Let me try to pull that up here for you. Because this is cool. We've been looking at everything in the spot. Okay. This one I put in last night. Just kind of sitting there. So if you check out the chart in the upper left corner, upper right corner, a little bit lower, but around the 120.50 area. Okay. We've got a nice demand level. This thing's in a strong trend here in the Swiss. So, it's nice low risk, high reward, and high probability way to join that nice trend. Okay. It's also into a supply level now where I wouldn't be surprised if it fell from. I'm not going to take this trade. I'd rather hold out for the long, but I'll draw the level in here. And there you go. Again, I'm not going to take that trade, but I'd rather, buy at the lower level. Anyway, I think you get the point there. Let me grab the chart one more time. So remember, though, with news, the whole point of today's talk was how to properly trade the news. Look, there's two ways to do everything in the market. There's the book version, or there's the real world way of doing it. And that's what, I really try to focus on is, look, you can read the books and take the seminars and all this other stuff, or you can focus on the reality of how you make money buying and selling anything and start doing that in the market. You know what I mean? So, don't be afraid. The better you get at the supply and demand levels, the less you should be afraid of trading the news. Probably a good idea to stick to when news comes out a little bit larger time frame levels, because that's where we're going to find areas where there's lots of willing demand or lots of willing supply. Okay. Yeah, this chart's going to be opposite to the spot. Okay. Yeah, if I pull up the spot, it's just going to be upside down. Okay, no big deal. These are the futures. All right. Here we go. There's my email address again. If you have any questions or comments or anything. Yeah, it is, Kev, but that's okay. That's all right. There was a nice strong move out of that level. And so thanks for your time and your trust and everybody. This is serious business. This is trading and making or losing money, so we take that very seriously. And again, thanks for your time and have a great day.